Hey everyone, I hope this finds you all well. I hope you've had a good start to the week. It's Tuesday now, 1 o'clock London time, and I hope that yesterday and this morning has been going well for you in the markets. I just wanted to put together a small video for you guys to basically have a look at how, if you are able to make consistent progress in the markets, even if it is very small, how it can really add up over a period of time. Now, the reason I wanted to put this together is not only from my own experience, but current traders that I'm working with as well. Generally retail traders have fairly small accounts. You can't open, or very few traders will be able to put in 15, 20, 30, 50K into a trading account just for trading purposes. The average retail account, I think, stands between £1,000 and £2,000. So, you know, if you do have an account that small, how can make decent gains out of an account that size? And the problem we have is that many traders with an account balance of 500, 1,000, 2,000 want to make, £1,000, 1,500 quid, 2,000 a month on that small equity, and it's essentially you're looking at 100 or even more than 100% return a month. Now, it's really, I mean, I'm not going to say it's impossible. However, it's very, very, very unlikely to do it consistently. That's the problem. You will maybe have a good month or have a good week, have a good couple of weeks, and be able to notch up that 100% return, double your account, whatever. Many traders have done it. I've done it in the past as well with small equity. It is possible. However, the only way you can do it is by significantly over leveraging your account. And obviously, if you're on my channel here, then you will be here because chances are you have had difficulties in trading and you have probably blown some accounts in the past, and more than likely that is due to over leveraging. So what I want to do here is basically just show that even if you have a small account balance, how, if you keep realistic expectations in the short term and don't over leverage, keep things very simple, keep things small, how over time it can add up quite significantly. So, how much return do we need to make a career out of trading? Now, obviously, this is a very individual question. Some people, depending on their lifestyle, will need £1,500, 2,000 a month. Other people will need 5,000 a month. Other people will want 10,000 a month. It varies depending on the individual, and that's something that obviously you will need to come to yourself. Generally speaking, most people, when they take up trading with a view to going full time, they will want to essentially replace their current full time income, let's say it's £2,000 a month, with the same amount from trading. Now, when you start talking to traders and saying, okay, so how much do you want to make a week, or how much do you want to make a month? How many pips do you want to make a week? So many times I've spoken to traders and say, oh, I want to make 50 pips a day. I want to make 100 pips a day. Um, there's no real basis behind that. It's just the figure that they've plucked out of the sky. And, I mean, is it realistic? Can you really make 50 pips a day consistently? Um, and the more important question really is, do you actually need to make 50 pips a day? Because 250 pips a week is quite a significant amount. Really, you're looking for a mammoth move on one trade in the week, or you're looking for decent moves every single day. And the market isn't generally, it's not going to give you a decent move every single day. Sometimes, a couple of weeks you will get lucky, but obviously market conditions change. When it's trending, great. Sometimes if it's ranging or consolidating, you're not going to get the volatility to move the market that much. So, this is why I asked, here, question two, do you really need to make that much? Are your expectations too high? Um, or can you still do very well with a smaller target? You know, Bill Gates, there's a famous quote by Bill Gates that reads, "Most people overestimate what they can do in 1 year and underestimate what they can do in 10 years." And this is massively true for trading. You know, so many new traders, retail traders, will want to start with an account balance of 1,000 and say, yeah, by the end of year one, I'm going to turn it into 10,000 or 15,000 or whatever it may be. And that there's two aspects to it. One is they don't view trading as a business. They view it as a bit of a jolly, somewhere to gamble, where they don't even need to go to a casino. They can do it from their front room. Or now you can do it wherever you are on your phone. And the other aspect is where you want instant gratification, um, which largely stems from lack of patience, and you want that by doing very little work or minimal work. And that's obviously, you know, a significant issue in the trading community, especially for newer traders who don't quite understand how the markets work and operate. So let's say, for argument's sake, you have a trading account with a starting equity of £500, which is very realistic for many newer retail traders. What would be an acceptable return for you in 1 month? Now, ask yourself the question, if you have a starting balance of £500, what would you want every month? I mean, would you want £500 every month, 1,000, 200, 250? You know, unfortunately, traders will set themselves unrealistic expectations. They will say that on £500 equity, I won £1,000 a month. And I mean, when you think about it, it's mad. I mean, it's not realistic at all. It's not going to happen. As I said before, you might do it in 1 month, but you might even get lucky and do it twice. But the only way you can do it is by over leveraging, and that inevitably leads to one thing where you just wipe out your account. So ask yourself the question, what if your aim was more modest? What if it was scaled back a bit? It wasn't as demanding. How would that affect you? How would that affect your trading? How would it affect your overall performance in the long term? And as you can see here, picture of a tortoise. Remember, the tortoise beats the hare. It's not about who can get off the mark straight away or really quickly. This is not a 100-meter sprint. This is about endurance. This is about consistency. This is about staying in the race as long as possible, giving yourself the best advantage, the best edge that you can, with the best strategy, the best system that is suitable for you, right? So rather than, let's say, trying to make 100% in a month, you aim for a more modest 10%. Now, I want to put a caveat here that 10% in itself is an amazing return. Okay, I mean, you look at what the Bank of England base rate is, was at 0.5% right now. It's, if you have a 10% return, that is absolutely fantastic, right? So, however, initially, I want to just because it's a nice round figure, let's have a look at 10%. How does it play out for you? How does it feel that you can potentially make 10% return consistently? How does that make you feel? Generally, when I ask the question, the initial response is, yeah, that's really good. That sounds great. On my bank account, I'm only getting like 0.5%, 1%. In a fixed ISA, I might be getting 3%. But if you can make 10% month on month, right? That's pretty substantial, right? But then the instant gratification starts coming into play in their mind, and they calculate that actually, wait, hang on a minute, 10% on £500 is just £50. So you want me to trade a whole month for just £50? And suddenly, the attraction of that 10% suddenly diminishes, and you can see what's going through their mind. It's just, well, that's a bit of a waste of time, isn't it? The thing is, what most people don't realize is the power of compounding. Now, if you can do it consistently, the results are amazing. Okay, but people don't take the time to really understand A, how it works, and B, even if you are able to make small but steady progress consistently, how it can transform your whole trading outlook, trading progress. If you were to aim for 10% a month, right, which, as I said, is still an exceptional return, how would that play out in the first year? So let's have a look. As a working example, let's assume you take 2% risk per trade with an average stop loss of 20 pips. Now, obviously, this is hypothetical. So, some trades, if you're scalping, your stops may be a little bit less. If you're swing trading, your stops will be a little bit more. You may not want to risk 2%. You may want to risk just 1% or 0.5%. Your system may give you a higher win to loss ratio, so you may be willing to risk 3 or 4%. That's completely up to you. And obviously, you can tailor this to your own trading system and needs, but this is just a working example to see you how it can really work for you. Now, if you have a starting balance of £500, that would give you, at 2% risk, that would give you £10 to risk in month one, right? So I'm coming at this from a spread bet point of view. So with risking 20 pips with a pound amount of £10, that would give you a 50p a point trade. So how many pips a day, week, or month do you need to hit your goal, which is 10% return? And let's just assume there's 20 trading days per month. So what we have here is, you can see January, I've just taken January 18 as an example, so month one. So that's £500 you have there. At 10% return, you're looking at £50 that you need to make in month one. Your closing equity would be 550, which gives you a risk of 2%, which is £10 that you will risk per trade. February 18, your starting balance is 550. There's your 10% goal. There's your closing equity. There's your risk per trade. And as you can see, every month, if you can make the 10%, the account grows as such. However, what I want you to realize is that, or what I want you to see rather, is how many pips would you need to make that happen? Now, over here, you can see that I've calculated the number of pips that you need per month, per week, per day, that will give you a 10% return a month. So in a month, you need 100 pips. That's it, just 100 pips to make your 10% return. Assuming 20 trading days, 5 days in a working week, trading days Monday to Friday, obviously. So that would mean 25 pips a week, or just 5 pips a day. 5 pips a day to hit 10% return a month. Now, does that seem realistic to you? Of course, right? 5 pips a day, average. It doesn't necessarily mean you have to trade every day just to get 5 pips. But if you're looking at 100 pips a month, you can very, consistently be patient, wait for your right setup, wait for the right signal, and you could potentially even do it in one trade. Even if you don't stay on for 100 pips, within a couple of trades, you could hit your monthly total of 100 pips. Now, does that not seem a lot more realistic to you than 50 or 100 pips a day? rather than looking for 50, how does it feel when you say, okay, I only need 5? Or rather than looking at it per day, let's look at it per week. I only need 25 pips a week, rather than 250. How does that make you feel? I'm sure that if you really think about it, you'll almost feel like the weight has been lifted off your shoulder. This whole pressure that you put on yourself, that I need 200 pips, 250 pips, 500 pips a week, whatever it may be, and suddenly now you only need 25. Your mind's probably thinking, actually, this can be quite easy. This can be quite straightforward to do. 25 pips a week is nothing, right? Okay, so that's one thing. So let's say, okay, you set yourself a target of maybe just 5 pips a day, 25 pips a week, 100 pips a month. How does that reflect in your equity? So as you can see here, we start off at 500. You make your 10% every month, and your account grows from 500, 550, 605, so on and so on. And December 2018, your account stands at 1426.56. What? I've just worked a whole year and I've not even made £1,000, is probably what you're thinking right now. Yes, that's what's happened. But before you dismiss everything, let's move on and just see how it grows and see how it works out. So year 2. Starting balance is 1569. We're still taking 2% risk, 20 pips stop, with a trade size at the start of January 19 at £1.57. Rounded up to £1.60, or you can round down to £1.50. But just to keep the math simple, it's taken the exact figure. Again, we're just looking at 5 pips a day, 25 pips a week, 100 pips a month. Starts off at 1569. You make your 10% every month. You make your 100 pips a month, which is, like I said, could be done 1 or 2 solid trades. Closing equity, December 2019, just shy of 5,000. So within 2 years, your equity has grown from £500 to 5,000. How does that sound? Initially, I'm sure you think that, oh wow, 5,000, yeah, that's really good. 500 to 5,000, that's great. And then I'm sure your rational mind will come back in and say, wait, hang on a minute. I've made £4,500. That's great, but that's over 2 years. That's just 2,250 a year. That's nothing. Yeah, maybe so. But let's see how it goes on. Year 3. Start off at 4,924. Again, you're making your 10% every month, risking 2% a trade. 100 pips a month, 25 a week, 5 a day average. And as you can see, 10% every month, bang, 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 bang. What's your closing equity at December 2020? 15,456. Okay, so now you're seeing some significant growth, right? You can see how as your account is growing, the 10% that you're adding on every year is starting to take effect. The compounding effect is starting to grow. And look at how it's accelerated. Year 1, the gains were small. Year 2, the gains were slightly bigger. And year 3, now we're really making some decent gains, right? So you're looking at over £10,000 return in this year. Okay, let's go on to year 4. Year 4, your starting equity, 15,456. Again, you're making your 10%, you're risking 2% per trade, and you're targeting 100 pips a month, 25 a week, or 5 a day. How does this translate? So start at 15, 4, 5, 6, make your 10%, your 10%, your 10%. Closing equity of £48,500. How does that make you feel? How would you feel if in 4 years' time you have an account balance of almost £50,000? If you were to carry on the way that you are, trying to make 50 pips, 100 pips, whatever it may be, a day, is it realistic? Can you see yourself consistently trading well, consistently making profit, and growing your £500 account to almost 50,000? In 99.9% of cases, I would assume it is very unlikely that would happen. You might have the odd one person here and there who's done it, by targeting big returns, by over leveraging, taking high levels of risk. However, for most people, taking unnecessary high risk, not being disciplined, doing silly things like moving your stop losses, snatching profits too early, etc. It's a recipe for only one result, and that is that you'll blow your account. So one more year, let's have a look at it. Year 5, starting balance of 48,508. Again, 10% return every month, 2% risk per trade, 20 pips stop, still targeting just 100 pips a month, 25 a week, 5 a day. That at the end of 5 years will give you £152,000 equity. £152,000 that has been grown from £500. And all you are doing is just looking for 100 pips a month. That's it. Now, how would it make you feel? Ask yourself the question, how would it make you feel if you are able in 5 years' time to have an account equity of £152,000? I'm sure you'd be absolutely amazed, absolutely joyous, so happy that you're in that position, right? But you can see that to do that, you only need 5 pips a day, 25 pips a week, 100 pips a month. Does 100 pips a month sound difficult? Does it sound easier than 100 pips a day? Yeah. Obviously, the key here is you will need obviously to have a good strategy to be able to understand your risk reward ratios, your winning ratios to your losing ratios, and tailor it to you, right? But you can see that if you lower, the whole point of this video is to show you that if you lower your expectations from in the short term, from making 100 pips a day, from making 50 pips a day, whatever, right? Aim high, right? I'm not saying don't aim high. Aim high long term, but in the short term, be more realistic. Bring down your expectations from 50 to 100 pips, whatever, down to even just 5 pips a day average. And look over a period of time how the growth can be so substantial. Yeah, does that make sense? This is just the power of compounding returns. Right? It's just having that understanding that if you start small, then over time, your stack will grow. It'll get bigger, it will get bigger, it will get bigger and bigger. But it all requires you starting slow and being patient and doing what is right in your process, following your process, not following the money. You know? Forget about the results, just follow your process, execute your strategy, keep your expectations realistic in the short term, and you can see how substantial the growth can be over just a 5-year period. So I hope this video has really opened your eyes on what can really be achieved from supposedly just modest gains, 5 pips a day. But if you're able to do it consistently, if you're able to be patient and disciplined and, be content with, for example, just 5 pips a day or 25 pips a week, think long term, try not to let the instant gratification swamp you and overcome you. Think long term, treat trading like a business, have a 5-year plan, have a 10-year plan, create a business model around your trading. I really hope that it was useful for you. Please connect with us on Twitter, Instagram, YouTube, Facebook. You can see all the handles there. And obviously, if you found it useful, please like and share with your friends, with your fellow traders, invite them to the pages. And I look forward to providing more useful content for you soon. God bless, happy trading, and have a wonderful week ahead.